Hey, what's going on, guys? So it's the day after 4th of July, and hopefully everybody had a good 4th, didn't blow off their fingers or anything like that. I'm at this place around my house called Wekiva Island, so everyone's having a good time. I'll show you guys. Got the bar here, food back there, and this river. They got chairs, and everyone's having a good time, having some drinks, having some food. Always a good time. So just gonna go over a few things of what my setup is gonna be for next week. I've been looking at a few things, but let me find a spot over here and I'll show you guys. So if anybody is going to sell options, they need to have some tools. So if you haven't downloaded the app for Yahoo Finance, you really should, because you get a lot of information from that. I use it a lot, so I'll show you guys here what I've been looking at for Carnival Cruise Lines. But you can use this for any stock, so not just Carnival Cruise Lines. That's just what I happen to use for selling my options. So let me show you here. All right, so this is Yahoo Finance. Let me get in a better spot so there's not as much glare. Let me go over here. But as you can see, here we go. As you can see, the Carnival Cruise Lines is right here. So right there. So you tap on that. You can get all kinds of information. So if you see, that's what the stock price is now, $29.96. But if you go down here and you go on the app, you get financials. So if you go to financials, let me go down here. Financials here, you go tap on that, and it'll show when you're choosing a stock to sell options on, you want this information. So you can see all the quarter earnings. So it'll show if they beat the earnings or miss the earnings. So like here, it beat it by 11 cents 2 quarters ago. This one here, the 3 quarters ago, it beat it by 7 cents. Last quarter that just ended, it beat it by 11 cents. So look at next quarter. Look how high it's going to go. Yeah, it might look good that it's going to have higher earnings, but if it doesn't meet the earnings, it's not going to be a good thing. I don't care how high it is. So if they put it at, whatever they plan on the earnings being, and it misses it, it's not a good thing. The stock's going to probably drop, so you don't want that to happen. So you definitely want a good stock to deal with. And if you look at the, let me show you here, if you look at the chart, check out the chart. Like, okay, here's the chart, right? So if we go to all, so all, it goes all the way back to like 1990, right? So if you look, it's going steady. It's got its ups and downs like every stock, but it went to a peak of 69.48 right here. And then boom, COVID happened, dropped like a rock. But if you look right here, I think I can spread this out a little bit. No, that's not gonna work. It makes it look crazy, but if you can see right there in the end, it's creeping up slowly. So it dropped, and then it started to creep up a good bit. So it was down to like, gosh, $7, $8, $9. I was buying during that time, so I was buying the shares at that time because I knew that thing was going to go back up. People love cruising, so I got a few shares at that price and some at a higher price. But you can see on that chart that it's going up pretty good. So it'll recover all the way back up to probably $70 or more. You never know, but as soon as they pay off more debt, which they're putting out notes on their debt, so they're getting a better rate. So that's a great thing. That's why last week the stock went up a good bit because of that news. And as soon as they used to pay a really good dividend, so as soon as they start paying a dividend again, it's gonna go up even more. So It'll get back to where it was before COVID. It'll just take some time, which is good. I like a slow moving stock to sell options on. You don't want nothing quick. Like this past week, forget it. The thing went up like $6 or something. So you don't want that because it's hard to sell options on, you know. It's hard to keep up with it. But a slow moving stock that's going up and you know where it's going to end up, that's the one you want to deal with. So let me show you like what, let me go to Charles Schwab and show you what I'll probably be doing. Oh, and Carnival is also, I'll show you this, going to be, I hope there's no glare. Yeah, there's all kinds of glare. But it's this article here. They are opening a new island the summer of this year. So I think it's opening actually this month. So that's really cool. I mean, if they're opening a new island, I don't think they're, you know, too worried about the debt that they have and the company as a whole. So, but I'll show you Charles Schwab real quick, what I'm looking at doing next week. So I put out, as you saw from the past couple videos, I put out some options 2 weeks just to put me in a better position and raise the strike price. So I did that. So I put a good bit out for the 18th, which is not this coming Friday, but next Friday, which that was fine. That's what I mean, that's what I normally do. If I'm in a bad position, I'll just go out further and I'm able to raise the strike price, or, you know, whatever it may be, make some more money if it's a good time. Like now is a very volatile time, so perfect time to sell options. And it's already around 30 bucks, 29, high 29s. So, I mean, the 1 year estimate bumped up to, I think, almost 31 bucks, and it's almost there now. So I think around this time it'll start to slow down. I think, we'll see, but I hope so. But it'll slow down, maybe a dip back a little bit, but I don't know, we'll see. I hope it dip back, so that would be great for me. But I'll show you what my plan is for this coming week. I have a lot of the options out at a strike price. I mean, not a strike price, but an expiration date of the 18th. So I only have 5 out for this week coming up, where the expiration ends the 11th. So I'm going to roll those this week, and I'm going to keep the ones for the 18th and not roll those because I don't like to get too ahead of myself, really. But I'll show you what I'm thinking about doing this week. Alright, so if you see these here, these are the ones I didn't put out for the 18th. These are expiration the 11th. So if I roll these where it's at right now, roll position, if I was to do it like right now, what I normally do, and roll it for the next week, which will be the 18th, and all of them will be the 18th, and I'll, you know, go from there. So if I was to do it at the prices from the closing of Friday, so buy to close, 5 options, the expiration is the 11th, and the strike price is $27.50. So I haven't caught up. I'm pretty far away from the price of the stock, but I think I'll be able to get decent money because it's so volatile right now. So, okay, buy to close and then sell to open, 5 options, and then put it out to the 18th at same strike price. And then we'll see if I change the strike price to 28, see what I can get. But if I do that, I can get 10 cents. So times 500, because each option is in control of 100 shares, I would get 50 bucks right now. So if I increase the strike price to, and these are the puts, so by increasing the strike price from $27.50 to $28, I would have to buy it. If it went below, I would have to buy it at $28, 50 cents higher, you know. So I'll get a little bit more premium, but if it does close below that price, I would have to buy it at the higher price, so I'm losing 50 cents. So I mean, I can get 10 cents now. Let me see how much it would be if I raise the strike price, and if it's worth it, you know. You got to see if it's worth it, because you're taking a chance on paying 50 extra cents per share times 500. you know, so that's 250 extra bucks you're gonna have to pay if you have to buy them. But it's pretty strong right now, so I don't think it'll be dropping back that far. But you know, it's happened before. So let's see here. All right, so if I raise the strike price to 28, so raise it to 28, so I would be buying them back at 27.50 and then selling them at $28. And remember if I kept the strike price the same, it was 10 cents I would get. So, okay, I'm getting 6 cents more. 16 cents I would get instead of 10 cents. But I raised the price 50 cents. So is 6 cents worth taking the chance? I mean, you get 6 cents more in the premium, which is 80 bucks instead of 50. Is it worth taking the chance to get 30 extra dollars, and you might have to pay 250 extra dollars if it goes below that, or just keep the 10 cents and keep the 50 bucks, you know, at 27.50? So I'm thinking I would probably, there's two things. I mean, I don't think it's going to go down to 28 bucks. It could, you know, and there's a good chance it might. So I think I'm going to keep it safe on Tuesday or Monday or Tuesday, and just do the same strike price, so to keep it safe, so I won't have to buy the shares. But really, I wouldn't mind owning the shares. So if you own the shares and it does go up, you're making money there. So there's a lot of variables that you have to, you know, look over and see what works best for you and what you think is going to, you know, work best. So I'll make my decision when the market opens on Monday and Tuesday, and this whole thing could change because the stock price could go up 50 cents a dollar or drop. You never know. So I'll make my decision then. But if it's where it is right now, that's what I would do, is stay with the 27.50 strike price and take my 50 bucks premium. And then next week on the 18th, I will all my options will be ending the same week, and then I'll roll them all for the next week. So that's where I'm at right now. I'm gonna get back to some fun, and got some friends coming. I'm gonna go to this bar right here, grab me a drink, and enjoy my Saturday. So you guys are great. Subscribe to the channel. I really appreciate it. I'm like at 53 subscribers right now. Just starting. It's only been a couple months, but I'd love to get to 100 subscribers as like the next benchmark. And if you guys would subscribe, I would really appreciate it. It's fun for me, you know, and I want more people to see these videos and learn and make money. So let's all make some money. All right, y'all have a great day. Bye.